Sometimes the companies that we hate doing business with the most actually make the best investments. Let's start with everybody's favorite villain, Comcast. The company has a market cap of $164 billion. Look, nobody likes paying their cable bill, but it's a necessity, especially if you have cable TV bundled with broadband internet. Now, this is a company that has suffered from cord cutting, but has actually adapted pretty well by adding things like wireless to its bundle mix. And that's what's really kept it afloat along with the content side of the business. From a stock standpoint, net income of $13.1 billion, a PE ratio of 12, and a 2.9% dividend. That's a pretty good valuation for a really solid company. I am a little bit concerned about $87 billion in debt on the balance sheet. But when you think about Comcast's business long term, I think there are some really steady elements. You have the broadband business, which is really the rock solid core of Comcast's operations at this point. And that really allows them to bundle all kinds of other things with it. Think about streaming options like Peacock. I mentioned wireless. Then you have cable TV, which is still going to be around for a long time and is probably just going to be a cash flow machine for them, even if it's a business in decline. So not a company that I like doing business with, but from a stock standpoint, it's a really great value and a really solid business. I want to take a quick second to thank this video's sponsor, The Motley Fool. Check out the link in the description to get their top 10 stock picks right now, or go to fool.com/rive. It really helps out the show. Again, fool.com/rive. It's right here. Another company that falls into that same category is Meta, or Facebook as they used to be known. I frankly don't use their social media products, but it's really hard to argue with their business, the amount of money that they're making at this point. $585 billion valuation. That PE ratio of 14 does pull out some one-time items that aren't included in that net income number of $18.5 billion, but you gotta like $40.5 billion in cash on the balance sheet, even if you think Mark Zuckerberg is going down the wrong path by spending about $10 billion a year trying to build the metaverse. Now, the stock doesn't pay a dividend, but you can't argue that it has a dominant position in social media. It adapts more quickly than any other social media company, which has probably been its biggest strength over time. It has scale in advertising, which is becoming more and more important with ATT from Apple and other privacy measures going into place across the industry. And it's a founder-led company, which is always a good sign for investors. The final company is Exxon Mobil. Now, you might not like the oil business, but it's hard to argue that Exxon Mobil is in a great position today. $411 billion valuation. They do have $28 billion in debt on the balance sheet, but that's actually coming down really rapidly because they're generating so much money from oil exploration and production at this point. PE ratio is just 11. And what's really changed in the oil business over the last couple of years is that companies are no longer chasing growth at the expense of profits. They're more than happy to take the money that the market is giving them with high oil prices and just simply return it to shareholders by either buying back stock or paying a hefty dividend yield like ExxonMobil does at 3.6%. This is also a company that over the last decade has been more comfortable in its own skin, if you will, being just an oil producer and not trying to pretend that it's getting into renewable energy, something it doesn't do particularly well. I actually like that from an investment standpoint, and this looks like a great value going forward. Now, these companies might not be your favorite, but that doesn't mean that they're not great investments. That's why I like Comcast, Meta, and Exxon Mobil at this point. They have really solid businesses, big moats in their field, and they're trading at really nice valuations.